Hello, everyone. Welcome to today's session. Thank you for your patience on the last couple weeks. Just had some illness, and then also had a few things happening last week that had to get a new registration link, and we should be back up and running here, at least for today. We probably won't have one Thursday yet, but going into next week, we'll try and get that Thursday one added back. But let's jump into the current market conditions right here and see. The first chart that I've got up listed here is the buy-sell ratio. One of the things to remember is, and depending on your time frame, depending on your strategy, if you're looking for a little bit longer term, or if you're looking for a little bit shorter term, or if you're looking for areas when you're adding into your portfolios, one of the things to remember is that when we are in this kind of a market condition, when we have kind of a bearish bias, at least on the buy sell ratio, and we're running into essentially more sells than buys in the database. Pardon me, that can accelerate. It doesn't last forever. Obviously, we can see that. We can see every single time we have these situations here, they just don't last. They may, in this case, the last year, really starting from about right, well, maybe not even there, really starting about right here, we're starting to get into that new uptrend, that new bull market. So this is still a downtrend, but we're getting, you get these ups and you get these downs and you get these ups and you get these downs even within that overall downtrend. Now we've shifted to the uptrend and we still can get those same things. So we'll go look at the direction alerts here in just a second, and also, but that's one of the things to consider when we're and I've got a couple different strategies that I just like to go through and test. And when I add new positions in a downtrend, they usually get beat up pretty good. So, but one of the strategies is adding in a new buy stock every day, no matter what, and then just seeing how those because sometimes those market conditions will just continue to move higher. So having some diversification, making sure your position sizes are small, and making sure you're diversified. And diversified could mean across individual stocks, but definitely having, if you're using muscle stocks or if you're using some of the high-ranked stocks, they're certainly volatile, as you've probably experienced, and they can move aggressively to the upside and the downside. So risk management is really is always the number one thing to be paying attention to, because it's still, whether we're in a, we're going to have periods of downturn. And when that happens, if we're too concentrated or we don't have our position size is too big, then that volatility can really crush us, and that's not the game we want to play. We want to play the longer game, the longer term game, be able to play consistently. And we're not in the super short term realm either, where we're day trading or really aggressive, even 2 or 3 or 4 days. The average holding time on most TraderPro signals are about 3 to 4 signals a year per stock. And so if you're watching some of those signals, you'll notice that. We'll go in and look at some examples here as well to see some of those overall patterns as they're happening. But this is kind of, we've got a couple of things happening. We'll look at this. We had this real wide range. We worked our way back up. We're still trending down a little bit, but we're getting a little bit of divergence. Okay, divergence is when you have one thing doing something and then the other thing is doing something different. In this case, the market is making new lows, but the number of sells are not making new lows. In fact, the number of buys are not making new lows. So as these are squeezing together, and in fact, let me just jump right into that, look at that SPY chart and see this price pattern here. So here was that first move lower, that buy sell ratio, and I'll go back to that, but it was widening. We had this move. We got this confirmation bar a couple of days ago, and it looked like the market wanted a little bit more downside. A decent rally today. I'd really like to see this hold. If we can see this bar hold and then maybe even close back up a little bit, that may be our 3-part counter trend, uptrend, 3-part counter trend. If we really fade into the close and we end up closing back below this 236 area, remember the 236 area is the swing high and swing low of the current time frame trend. The snap tool will automatically snap us here and here, and then it'll draw these lines over on the chart. So this upper range, this momentum range, as long as we're up inside of that range, typically that's a healthy counter trend or consolidation on individual stocks as well as markets. Once we start to break that down, then it becomes corrective or a counter trend correction, where it can be a little bit deeper. It still may be an uptrend, but it may retrace a little bit deeper into some of these zones before it continues that uptrend. We're hovering on that downside, so we'll watch to see what ends up happening at the close of the day. So not all market conditions are the same, and when market conditions, a quick glance of market conditions can be that buy sell ratio and say, okay, we've got red right here. I mean, or I can say, this is the more aggressive location here. If I'm looking for that 2 or 3 part move, which we typically get on these oscillators, that you're getting, here it starts to move, you get these 3 parts. So even right here, it's like, okay, we're approaching a possible crossover, and as it's moving higher, then maybe I do want to try and get in a little bit earlier. So even if we were to rally today and this were to tick up like this, say it were to tick up like this and this were to tick down like that, and say, okay, now we're getting closer and closer and we're getting some divergence, we're working our way back together, but we're not quite there yet. Maybe this is an area that I want to start to nibble a little bit on some new entries or some new trades. The sentiment buy sell ratio, this is one of my favorites to look at, because it really does give a good insight of market breadth, and it's pretty easy to look at and say, okay, I can see the pattern, I can see the characteristics here that, it doesn't, almost never does it go up and then, and down and then cross back over the other direction. We usually get a couple of little bumps, or this one looked like it was going to, and it's like, oh, that just doesn't happen very often. And sure enough, we get another move back down again. And even here you can see it's extended, but there's multiple, I call them fits and starts, where we're getting these, these ups and downs. So we'll see if that ends up panning out. We are holding on sentiment. We're holding right at that 50%. So again, we've got 2 things that are potentially bullish. They could get bearish in a hurry if this day closes out bearish and continues to move up to this upside. But the bullishness is that we've got some divergence. We're squeezing back together. We're approaching. If we could get another bullish day today and see some buying interest, that may be a support area. And then the other bullish side of that is that the sentiment location is still above this 50. It's still above halfway. So this upper range is, we're not trending currently, but we're working our way back up to an extreme. The extremes tell us one story, the middle tells us another story. The middle range right here tells us that we're trending, or we're trendless. We in this case, we are trending still to this direction, but we're counter trending that overall move. If I go back to the chart and try and explain that, we're still working on this trend, and this is a counter trend, this direction, and this is the chop in anticipation for more upside. It's just the way that the markets move and stocks move, and sometimes it's maddening. It's always maddening, but it is, we can kind of correlate several different trends and several different things to be able to look at. Number one, what's our long-term direction? What's our overall market bias? Well, we know that we're on the upper end of the range. We know we've been moving higher. We know that it's been straight up, and that this is an extreme location, and now it's really just kind of pausing that. And if you look at it on this chart, you can hardly see it because it's such a long-term time frame, but it is a significant location. These other ones are also still stuck right in the middle. Sentiment also is actually bullish, so there's still a bullish bias overall. We do have one of the things I also like to look at is what's the buy sell ratio doing on major indices. So the Dow Jones Industrial Average buy sell ratio is right around 1. NASDAQ is less than 1. So you have NASDAQ 100, I should say, and the Dow Composite, the S&P 500. So again, a 0.56, you've got more sells then you do buys, and then you've got some that are stuck right here in the middle. That also is going to add to our kind of our confirmation, because really what this data is telling us is, or I should say what this data is telling us is the entire aggregate of all of this. So we can then say, okay, but we can look at these a little bit more minutely and say Russell 3000 is getting obliterated, 800, 900 to the downside, 300 to the upside, 0.33. It can get a whole lot worse. It can get down to 0.1, but for whatever small cap, riskier assets are getting sold pretty aggressively right here. We had a big run in utilities last week, and you can see now that bumped it all the way back up to 9. Let's take a look at some of those and see what's happening there. So you get this overall uptrend. That's one of the other things to be paying attention to, is what is working. What's the quick glance of what is working? So we can glance at sectors and we can say, okay, we know that, even of these sectors, the buy sell ratio at 2.837, here's one right here, 1.6. We'll look at the, it's oil and energy. Well, let's notch that down even more and see if there's anything compelling inside of that. And now you've got a 9-to-1 reward to risk on oil and exploration. Let's take a look at some of those. So then I can kind of fine tune the overall perspective of what I'm watching for and what I'm looking at, and see if there's any ideas that I want to look at. Even just glancing that and say, oh, what's working? Oh, oil and energy is working. Utilities are working. Based on that buy sell ratio, that might give you some ideas. If the market rallies and risk on, like small cap or tech stocks start to move higher again, some of these may retrace. But as of right now, these are becoming the leaders that we can focus on. And we're seeing that more and more in some of the new buy lists as well as they're coming out. So a couple ideas for you as far as utilization of some of the scans and some of the quick glances as you're going in and you're looking each morning and saying what are market conditions, number one, because the market conditions are, again, what that tells us is how big of a position should I put on? How should I allocate? Should I even make any trades today? We don't have to do anything. Just because we can doesn't mean we should. And when market conditions are weak or weakening, then those may be situations where we just sit on our hands a little bit. Let's look at some of the current stocks that are moving. Let's look at the new buy list. CABA had a real big move yesterday. It had a really good solid confirmation bar the day before that. It broke out, it retested, and then it had that big run up, I think 17% or so yesterday. This is one that is taking its own sweet time on this long-term counter trend. It had a big run up right here early into the end of last year and the beginning of this year, retraced it all, or half of it, most of it, and then it's been kind of working its way in this really tight range for a long time, all the way since May. It's finally breaking out of that, so we may see some continuation. Those momentum style stocks, those are also ones to keep an eye on, because they attract additional momentum. When you get stocks that start to move, they attract additional eyeballs of lots of different shorter term traders. They're like, oh, here's something that's moving. I'm gonna focus on that. They may just add to the volatility or add to the volume by doing some day trading on a stock like that. Not that we're doing that, but when we have momentum stocks that are moving big, that can become a self-fulfilling prophecy where you actually get even more things that are moving. RETA, that was a buyout. Those sometimes take a little while to clear out until the symbol actually changes. And we're seeing this on a lot of muscle stocks here as well. We're seeing that big run up that we had. A lot of them are retracing. Some of these are going to hold. Some of them are going to, really move back down. So if you're trading the muscle stock group, just be aware of the level of volatility that they can have. And the way to counteract volatility is with position size. Okay, so it's smaller positions. If you have a stock that's gone from 13 to 18, it could just as easily come back down from 18 to 13. So 20-30% of volatility. Just be prepared for that. And again, the way to prepare for that is smaller position size. We don't have to be heroes and or gamblers and just try and guess which one's going to go and swing for the fences on it. That's usually a bad idea. But market conditions are also saying we're in that bearish we're in that bearish retracement. We're in that bearish downtrend. If we start to see the buy-sell ratio tick back up and markets start to stabilize, then you go back to this muscle stock group and maybe look for some that have had some pullbacks. And remember, from inside the screen, we can set different criteria of, like, one of these that I have is muscle stocks not extreme. Let me go back and go muscle stocks not extreme. So in this case, it's going to pull stocks that are, well, that's had a split. That one is extreme. This one does pull in splits. The other scan doesn't. That one also, let's skip through. There might be a couple of those 100 ranks that we've got to get updated. They're not extreme to the upside. They may still be in this overall uptrend. So like Ocean International, OII, an uptrend. It's retracing. It's an oil stock. It's inside of this buy zone. So as we're building out watch lists, we can go in and look on just some other methodologies other than just focusing on this particular scan itself. CBay, this has been one that's also been moving. We just looked at that one. I'm gonna scan over here and let's go through and look at some of these and see if there's anything that's interesting. Skip through that one. CBay, the retracement. I really like these when they have big runs. They're in the muscle stocks group. They've pulled back to support, because oftentimes you get that uptrend and that retracement. If it hasn't gone all the way back to a sell signal, but it's inside that and it starts to stabilize, I'd want a day, at least one day of support, and then watch to see if there's either a confirmation bar higher or at least not a down day. If I were to change this over to just the candlesticks, oh, come on. There it goes. I don't know why it's doing that. Let me just refresh that. But you can see those black bars are essentially down days. They're red days. And the reason they're black is so that you can just identify what is a down day, because it's still in an uptrend. The green represents the uptrend. Now it's shifted over to yellow, but the black represents that it's a red candlestick if I were looking at that. So sometimes this is also an easier way to see it, because you've also got this data up here and you can say, I just prefer this perspective versus a different perspective. So a good strong uptrend and a pullback in that uptrend inside of that momentum zone, those can also be candidates for new buys. Now, some of these, if it stays at a hold and it stays here today and then tomorrow it rallies and it goes from hold to buy, then it will show back up in the new buy list. It'll show up here as well. If it doesn't, if it just stays green and it never pulls back and it never gives me a yellow, but it's a down day and then it finds support and it moves back up, then it won't go back into the new buy list. So there, sometimes you can miss out on something that might turn out to be a nice trade because it hasn't, it's still green and it hasn't moved from yellow back to green. Let's see, RETA. Okay, I'm gonna go through back and get caught up here. I wanna spend some couple minutes on these. Nice looking pattern here on this one. Even though it's a down day, the swing high has been grabbed by that as of this morning. So we got a new high or potential new high. And if it were to pull back, then I'd be watching for a little support area inside this range, whether it's at that 91.5, or even if it dips back down to 88, 89, that would be ideal. Now, at this point now, if you get a little bit deeper pullback, an opportunity for just a little bit cheaper price on that. VIST, this is a nice pattern as well because it's got a breakout and it's retesting that breakout. What I mean by that is this location, kind of inside of this zone, it closed above that. It's got a new high, a new time frame high, which is this time frame that we're looking at. Now, again, when we're talking about time frame, we're not talking about a 5 minute or a weekly or a 1 minute or a 1 hour. We're talking about the year or the monthly time frame, because everything inside of TradersPro is a daily chart, and it's designed to do that so that you can't method jump or system shift to where it's like, how does this look on the 1 minute chart? Let me go look at it. How does this look on the weekly chart? Well, let me go look at it. No, it's a 1 day chart. It's built for that time frame. It's designed to have a certain time frame in mind, 3 or 4 months of holding time frames, looking for strong uptrending stocks and inside of that upper momentum zone. And if it can capture this new high and then find some support, what I'd be watching for is that bottom wick right there. You can kind of see how it's got that little bottoming tail bar and it's starting to rally. If it could hold some support and move higher, then that lets you know that there's buying demand there. There's additional demand, and that could continue to propel that stock higher. TNGX, this had a real big run. These are always, these are always fun to look at. Sometimes they're a little aggressive to trade, but it had, but anything medical and biotech or medical drug, pharmaceutical type stuff, they're very volatile because you're dealing with a lot of speculation. Maybe it's a drug that hasn't quite been approved yet, or just there's just a lot of variables that are still looking forward. Maybe they're making money, maybe they're not. I have no idea what that gap is at this point, though. If I were to go in and buy that, I would want to look a little bit closer and maybe see what the story was there a little bit more. In terms of price pattern, though, you've got this uptrend. You're still in this momentum range. It isn't a downtrend, so if we were to look at a little bit longer term chart, it's going to look like this probably, and maybe just starting to turn that corner. We'll go out to 2 years here and see if that actually pulls that in. Let's go 1 year first and see. So here's the downtrend, just really, really volatile stocks. There it is right there. So long term, really long downtrend, uptrend, big gap higher. So that's why the long-term trend is still down, but it's shifting, it's moving, and it may provide some opportunity there going higher. I don't love those though, just because of the volatility. TDW, again, oil having a little bit of pullback today, but in a strong uptrend and definitely in that upper momentum zone. PKK, this actually was the new buy stock today, and it's an interesting price pattern. It's really skippy because it's an ADR, and there's probably just not a lot of volume on it, and but that's one I mentioned on the update this morning, that morning update, to make sure when you're looking at a stock that looks like this, to double check with your brokerage account and the data in the brokerage account that you're actually going to be trading it in, just to make sure this is not some preferred version of it or some variation of the ADR. You can still actually make a trade on something. The ADR is really just an international company traded in the U.S. is essentially what those end up being. Let's take a look at a couple of others here. OLMA, this one actually has been a nice one. It's been in the scans and it keeps going back and forth, and it just keeps trending nicely from really all summer. It had these big breakouts. It kind of consolidated here, had one sell signal that would have triggered an exit on this initial buy here. So that was the first buy after a sell, and this is the first sell after that buy signal. So in terms of the back test data, when you're looking at that, those are the actual back tested values, is this bar, because it's the first buy after a sell, and it's this bar, which is the first sell after that signal had taken place. Okay. Although we can use lots of different methods, like going from hold to buy. The back test is not tracking any of that data. It's just simply tracking when did it go from a buy, from a recent sell, and when did it go to the next sell signal. And if we were to look at that and say, if we were to back test just that time frame and say, what does that look like? You can see it right here. That uptrend, that was 119% on that move. And then we get a new buy signal, which is going to start a whole new trade and say, here's the next new signal right here. So that becomes, this becomes the new buy signal, and it's a whole new trade again. Part of the value of using this methodology is that you don't have to think a whole lot. The frustration, though, is when we have 2020 hindsight. And 2020 hindsight shows us that we could have stayed in the stock, right? But not real-time data, but real-time today, when you're looking and dealing with today, and if I were to pull in that chart and say, what does that stock look like, as of this day right here? I might have said, gosh, that's just still in the upper zone. It's bouncing. It had a really good tail bar there. I might decide to forego that signal, especially if the next day gives me a good confirmation bullish bar to the upside, like that one, say, because again, technically it's the opening trade on the next day after the signal. So because it's an end of day system, I'm watching this bar. I'm going to get this bar at the close of the day, and the next morning I'm going to exit that trade. If you're continually following the system, if you're not, you may or may not have sold on that the next day because you're like, oh, it's gapping higher. Let me just give it, let's see if it continues to gap higher. And that starts to add more, subjectivity. We're starting to add our own perspective on it. And sometimes that's good and sometimes it's not. Sometimes our perspective is damaging. Our emotions are damaging. Instead of saying this is an uptrending stock, it's a volatile stock, it's a muscle stock. It could just as easily fall off the table right here and head back to $6 as it could go higher. So knowing that, I don't always want to second guess myself, but guess what? If you did sell it and you sold it at the open, guess what you can do? You can always rebuy it. And yes, you're buying it at a higher price, but so what? I've mentioned that in these classes before that I'm coaching Little League football, and we tell the boys that. We say, listen, that play is over. There's nothing you can do to change that play. It's over and done. We have to move on to the next one. And the next one has to be the only thing we're focusing on. Trading is the same way. You absolutely have to let your losses go. Learn from them, learn maybe what happened, or learn how you dealt with it, or learn why it felt painful, or learn why it was too big of a position, or learn why you're like, oh, that's no big deal. I'm fine with it. Then you're learning that your personality and your risk tolerance is starting to align with your trading plan and your strategy, and that's really an important part of understanding. Is it suitable? Can I deal with the volatility? Can I, if I get stopped out, is it going to, crush my day? Am I going to beat myself up? I'm notorious for that. I've been doing this a long time and traded all kinds of different variations and different things. And I beat myself up. We all do. And that's a part of trading that really is damaging. So sticking with the methodology, I kind of diverged on that. That's a little bit more of the trading in the zone mindset of how, dealing with yourself and dealing with your own emotions and dealing with your own risk tolerance, because stocks are going to do what stocks are going to do and markets are going to do what they do. And yes, we can anticipate what that's going to look like, but we never quite know exactly. And so we always have to prepare for that. And we always have to say, okay, there's always a possibility that this could not work. What does that look like for me? Does that mean I need to have this size of position, or do I need to fill in the blank? Okay. And as you're doing that and answering those questions, you start to build out that trading plan a little bit more, and it really customize it to how you're able to manage risk and how you're able to understand your own perspectives as well. Okay. Let's see. I have got, let's go through just a couple. Oh, actually, I already pulled some of those up. So some interesting stocks, interesting market conditions right now. Don't forget about some of these other tabs. We'll spend some time over the next few courses the next few sessions going over some of these other ones as well. Maybe some different ideas on how to use them. And when you're pulling up a stock, there's obviously a lot of stocks in there. Which ones to consider? You're seeing. I like to glance through and see what are we seeing here. Well, we've got Tidewater, we've got Oceaneering, we've got silver, we've got energy, we've got resources, mining, gold. Okay, that's what's starting to work right here. In fact, let's go look at that gold, Harmony Gold. I really want to see gold take off here, but that typically will mean the markets might pull back. So we may see gold and some of those other assets pause a little bit here if the markets continue to rally. But that's a quick glance of kind of looking to see what's happening. Even more importantly is in the, well, not more importantly, but each day, the new buy list, as you're looking at some of those, it might give an insight of what sectors are moving as well. and that's what we're seeing. We're seeing pharmaceuticals again, oil again, gold again, starting to pop up, and that may be the current trend that we're looking at. So I'm going to finish on that note today. I appreciate your time and effort, and the recording will be up here on YouTube for you to review at your leisure. And we'll see you next time. Thanks a lot. Bye now.